Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis, guys. Well, we're getting back and forth action here, which is overall standard to see when we're in the chop phase. You know, Uncle mentioned that we're likely heading into the chop phase after multiple days of just getting us at one directional move to the upside. I was hoping I was wrong, but it looked like I'm not wrong. But we have good news. Okay, we have good news. The good news is the market can't chop forever, and that we are starting to get a structure here, a structure that's developing. A couple of things that Uncle is seeing. Okay, it looked like a flag is developing, but it also looks like some type of M pattern is developing. This is standard stuff to see, guys, when we are in the chop phase. Okay, when we are in the chop phase, that's when it gets complicating. That's when the bulls become extra bullish, and that's when the bears become extra bearish. But as sheeps, we need to become extra sheepish and remember that during the chop phase, the markets consolidate and building strength to either go up or down. People, for some reason, just think the market moves in one direction. They think they can only make money in one direction. The bill collectors don't care if you made your money bearishly or bullishly. I just don't understand it. But we are getting back and forth action. And when we get back and forth action like this, let's face it, it's complicating. Not even sheeps want to trade these back and forth action because it requires a lot of work. Okay, because when you're trading the chop, you got to focus more on level to level. You got to focus more on scalp. That means you got to focus more on looking at your positions, because when we get a trend move, you get a good position, you take profits on your next target, leave a runner, and it usually just, the runners usually just run during the trend phase. That's the best time to hold runners. But right now we're in the chop phase. And what are the important pivot levels to watch? Okay. But before I give you guys the level, I need to remind you guys real quick, how do we use these levels to trade? First of all, Uncle has a level to level approach. Okay. And then if I want to catch a bigger move or even swing trade, I'll do it with runners. So level to level means you enter on one setup, right? So yesterday, SPY just chopped. I don't know why, but it just chopped for the whole darn morning, up and down until we finally got a move in the afternoon when it broke down 606.4 and 605 at the next target is where you want to take your profit. Okay. Now, when the market is trending, like when it picks a direction that it wants to go, like let's say it does a false breakdown setup, longing the breakouts on the 15-minute chart works very well and can lead to bigger moves, as you guys can see. And it happens a lot. Even shorting breakdowns or back tests of breakdowns can lead to nice moves to the downside. But when the market is chopping, you're not going to get those multi-level moves. A lot of time, all you're going to get is either a scalp move or a good level to level move. When we are in the chop phase, it's very important for us as traders to, yes, unfortunately, lower our expectations a little bit. Okay. Now, some people like to chop because when they are wrong, because we're in a choppy situation, when they're wrong, they don't lose as much. But at the same time, when you are right, you won't win as much. Does that make sense? But either way, whether we're in the trend phase or the chop phase, we always approach it level to level style. Okay, level to level approach and leave runners. In the chop phase, the runners usually get stopped out. But in the trend phase, the runners run like Forrest Gump on steroids. Okay, but right now we are in a chop phase. I see a bull flag, but I also see a potential M pattern. Bulls are going to think we get the breakout. Bears are going to think we're going to get the breakdown. What do sheeps think? Sheeps don't give a damn where it goes. Just give us a damn setup. Give us a damn move. What we care mostly about is volatility. And when we are in the chop phase, Volatility usually returns back to us when the chop range of the chop phase breaks down. So what levels do I have? What structure do I have? Well, you guys see the 602 level, right? That could be, helping to develop the M pattern. But I also see a buy zone around that 602 level. Multiple times, all right? Multiple times around that 602 level, we had buying pressure. And now we got this downtrend line from December 6th high and December 11th high. What does this look like? This look like a descending triangle pattern. Okay, now some people say descending triangle, that's a bearish pattern. Not necessarily. It's a consolidation pattern. Okay? It's a consolidation pattern. What is the range? 602 up to 608. Anything in between is chop, it's noise, and we should not trust it. If you're going to trade it, scalp or level to level move. Okay? So if 606.4 breaks down, 605 and 604 will be where you want to take profit. If you leave runners and 604 breaks down, 602 is where you definitely want to look to take profits and leave a runner. That's the bearish case scenario. And if we break down 602, we break the chop range in favor of the bears, and we could get a trend move to the downside, a nice trend move. But if we break up above 606.4 and we clear 608 finally, because we still haven't done it, but now we got a little more context behind this level. It's not just a fib level, it's not just a sell zone, but it's also based on the chop range, this structure right here. If we break out 608, SPY would then be in breakout mode. Earlier, before when we was testing 608, SPY's RSI was pretty over bought. Now it's a bit cooled down after a few days of consolidation. If 608 clears, Uncle Chartist, will feel a little bit more comfortable calling in some type of bottom that should lead to a new all-time high close. Above 608, 610, 611.5, 613 fib level, 615, and 616.5, which is a fib level, would all be in play. Guys, I know some of you guys are saying that the SPY is super expensive. Who the hell would buy this at 600 plus? I get it. You guys are not wrong. Okay? But to be successful as a trader, you have to do more than just be wrong or right when it comes to direction. Okay? You got to focus on the setups. You got to focus on risk management. Don't focus on what we can't control. We cannot control if the market's going to go up. We can't control if it's going to go down. We cannot control if it's going to chop. But what we can control is the levels we identify, the setups we choose to play, and where we choose to take profits or cut loss. That's what we can control. That's what Uncle wants to hear more about. Making gains, I love it. We're making money. That's the main point, is to make money. But I also want to hear more about the things you can control that led you to make money, because we can't control if we make money. Like I said, we can't control what the market does. It's manipulated by the market makers. But we can control ourselves. We can control our greed. We can control our fear. We can control our thought process. Does that make sense? So I recommend us to be sheeps. Sheeps, not followers of something foolish, but followers of the price action. The greatest shepherd in this game is the price action. And those who learn how to read it, communicate with it, are going to be successful. They're going to have the ultimate guidance. It takes a lot of practice. It's confusing. Sometimes it feels like it doesn't work. Sometimes it feels like it can only work. You don't want to get too cocky, but you want to stay humble. I believe in this. That's why I've been doing it for years. And like I'm saying, guys, above 606.4, and we finally clear 608 with some darn volume. Where's my volume indicator? See, the volume's pretty low. But if we can get some volume and we clear 608, holy moly, donor shop, the bears are going to be pissed. okay? But if we break down 606.4, go retest that low at 602 and break it down, the bulls are going to be pissed. All right? Anything between 608 and 602 is just chop. Be patient. The chop phase does not last forever. And once the trend phase return, I suggest you trade with the trend. Because when the trend phase come back, you're going to see a lot of retail traders try to call a top or a bottom. For some weird reason, I don't know if it's that stupid Michael Burry movie, but most retail traders, they want to play reversals or something. I don't know why. Most people don't. We tell them trade with the trend, trade with the trend. Most people don't trade with the trend. They're trying to find the top, they try to find the bottom, the reversal. I don't know why that attracts people so much. For me, I'd rather stick to what works. Okay? Anyways, that's educational stuff, guys. Let's move on to Triple Q. Now, Triple Q have a situation here, right? You know, I'm talking to you guys about the chop face. What's another sign that we are in a chop face? Well, when we get inside candles like this, all right? We had a big range from 524.5 up to 530.6. And then yesterday, very low volatility, and it closed within the range of the preceding candle. This is an inside candle setup. How do we trade this? We trade it by watching the break of the range of the preceding candle. I like to refer to it as the mother candle. And this is the baby candle, the child candle, because it's within the range of the mother candle. Now, we're gapping above it right now. So above 530.6, it's overall bullish. Okay. I have next resistant at 532 and the fib level resistant at 534. Those are targets for the upside. If you're going to favor some downside, then we need a gap and crap. We need a gap and crap. That means we need to break within the range of the preceding candle. 530.6 was the top of the range. That's going to be support. I also have support at 530, so up to you guys what you want to use. But either way, breakdown of 530 should send Triple Q back down 528.5, 527, 525. We do have the low of the preceding candle at 524.5. So if you want to use that, that's fine. But either way, bulls take back control below 524.5. But if they want to, avoid new all-time high, they're going to need to break back below 530 and send Triple Q back down. Otherwise, 532 and 534 are targets. Tesla look like I don't know if that qualifies as a dark cloud covered candle. The body of the red candle was not big enough, but we'll see what it wants to do. We do have the levels to watch: 422 and 420. If it fails, 418 and 415 in play. Now the low of this red candle is 415, so if this is a dark cloud cover candle or even an evening star or some altered version of an evening star pattern playing out, that 415 must break down. All those patterns, or 3 candle, 2 candle patterns, they all say the same. They need to break down the support of the red candle, which is at 415. But we're a little far from that right now. So 422, 420, and 418 are supports. First must fail to get to 415. And below 415, we can get a much deeper pullback. Okay. Resistance is at 424 and 425.5. If it clears, 427 and 430 are back in play. Above 430, we're heading to uncharted territory. That means Uncle have no support resistance levels yet until we get a little bit more development. NVDA. Now, guys, I'm talking about the inside candle setup. NVDA has been in a chop phase as well. We know this to be true with inside candle after inside candle. Now this one is a double inside candle. Okay, now you guys remember a couple weeks or a few weeks ago, Uncle said that Tesla was going to give us this explosive move. I don't know if it was going to be up or down, but it'll give us an explosive move. And we ended up getting like a $10 to $20 move in a day. It was truly explosive. And it was because of this setup right here. This same setup that I see on NVDA right now. We have an double inside candle setup. All right. So based on this setup, now I could be wrong, and I'll admit if I'm wrong, but because of this setup, I'm expecting an explosive move, okay? And if we get that explosive move, guys, this is very important today to pay attention to the levels, because if we do, whether it's up or down, there's gonna be a lot of money to be made. All right. So I recommend look to long above 140 and 142. Okay. Now this is with more context, more conviction now. All right. Before it was just based on fib levels and stuff, but now it's still based on fib levels, but we have more context. This gives me more conviction into the trade. Does that make sense? So if we clear 140 and 142 long, we could get an explosive move to the upside up to 148, maybe higher. Now, if it's to the downside, you want to look to short below 138. You want to look to short below 135, and definitely look to short below 133.5. If those levels break down, could be an explosive move to the downside. Catch the move, okay, guys? Catch that wave. Try to be on the right side. And if you're not, just cut loss, because if it is an explosive move and you're on the wrong side of it, you're going to lose a lot of money, okay? So please, just cut loss. And if you are on the right side, do it level to level, and then leave runners and let your runners catch the rest. IWM has been looking bearish to me since losing that 239 level. We back tested it as a resistance, found selling pressure, and yesterday we broke down the 236 fib level. Okay, this is bearish. 234.5, 233, and 230 are all in play as long as below 236. Bulls need to recapture 236 to put 237.5, 239, and 240.8 back in play. Based on this downtrend line, guys, I would call a bottom only if 239 and 240.8 can recapture. That would put IWM in breakout mode. Apple just, this stock is crazy, okay? It's crazy, and it's continuing to be bullish, all right? As if it can clear 248.5 today, it tried yesterday. It smashed 250. It almost hit my 251.5 level, but failed, okay? But if it can do that today, clear 248.5, clear 250, then 251.5 and 253 are in play. 251.5 and 253 are fib levels. I would not look to short once again unless 247 fails. We need 247 to fail, and that will put 245.5 and 244 in play. Remember to play it level to level. But if you guys want a bigger move to the downside, the 244 fib level and the 241.6 level must fail to give us that bigger drop to the downside. But watch those levels up top, because to even break those levels down, it will start with the breakdown of those higher levels, 247 and 245.5. Amazon has an inside candle setup as well. It's consolidating, but if it's to break it out bullishly, 230 and 232 must clear once again, set us to new all-time high. And I can't get bearish unless 228 and 226 fail. Those are fib level, 226. But it's also based on the mother candle, okay? More conviction, more context. So we break down 226. You want to look to short. 222, 220, possibly all the way back down to 216 would be in play. Meta, inside candle setup as well. Look to long once again if 630 clears to put 636.6 in play. 635 and 636.6 in play. And if that level clears, 638.4 would be a target. Bottom is in if 638.4 clears, because that's the high of the mother candle. If it's bearish and we're going to go down, then once again support at 628, 625, and 623.5 must fail out. There is a support based on the inside candle at 621.5. So if that level failed, I will be bear biased based on this setup with 620 in play first, and then 617 and 615.6 as targets below. Microsoft, look at that nice looking wick up there. Interesting. Okay, 449.4 is a fib level. It's trying to defend, and if it's truly to defend and put in a top, support must fail once again. 448, 446. If it does, 444, 440, and 437.6 would all be in play. I think Microsoft needs some consolidation, but if it wants to give us some more unhealthy pops to the upside, then 449.4, 451 must clear. That should put 456 or higher back in play. DXY, gotta be careful here, okay? Here's why. We retested my 107.1 level. As you guys know, that was one of the levels I've been watching. We had a breakdown of that level back in November 27th. Today, guys, we are back testing it as a resistant, not necessarily bullish price action, unless DXY can clear 107.1 and to put 108 in play. Otherwise, if it's defending like this and support at 106.5 failed, this is bearish, guys. This is bearish. This is a bearish defense, bearish price action right now, unless 107.1 clears. I like to look at the DXY not because I trade it, but because it helps me gauge the SPY. So, if it is dropping, that might mean SPY could be popping. Either way, this is not a prediction, guys. Just be ready for any case scenario. DXY is bullish if it clears 107.1. All right? Otherwise, could drop. Coin, some nice intraday moves on coin. Not so much on the daily chart, but intraday moves pretty nice. We're still battling here at this up trend line with coin trying to recapture it. Still battling. No official breakdown just yet. Yeah, I once again, it's at 316.8. Once again, I have resistance at 318, 320, and 322. To truly put a bottom in, I need to see 322 clear. The coin tried to do it yesterday, but it just failed. They couldn't hold it. Hit my 323.5 resistant level though. So level to level moves been awesome with this stock with runners. But if we're talking like a bigger swing move, all right, I need to see either that fib level right there clear at 322, or we break down once again this trend line, this white trend line. Okay, so like I said, 318, 320, 322 clears. You want to look to long, especially above 322. But if it's bearish, well, the uptrend line breakdown is around 313-ish now. I have support at 315 and 313. If those levels fail, that's bearish. 311.7 and 310 would be in play first, and then 308. And I think we can drop all the way down to 304.5 as a target, okay? And if, I'm telling you guys, if we break down this trend line, I think it's going to drop a lot lower than the levels I'm giving you. But like I said, play level to level and leave runners in case we get blessed with a bigger move. DOGE, what I mean, if you played at level to level, it cleared, 40 cents. I didn't play it, but it cleared 40 cents. It smashed 42 cents. We're getting some level to level moves. Now we're back testing 40 cents as a support. Not necessarily bearish right now. If 40 cents can hold, I'm telling you guys, I will. If we get that 42 cent breakout, I'm going to long it. But if we break down 40 cents, that's bearish to me, and I think we can go a lot lower, 38, back down to 35, 36 cents. Okay, hopefully not, but if it happens, it is what it is. You just got to react. 40 cents fail, bearish. 42 cents clear, bullish. I would look to long. Bitcoin, still looking bullish. It just needs to clear 102,000 to put 104,000 in new all-time high in play. I can't get bearish unless 100,000 and 95.5 thousand fails as support. Okay, guys, that's what I have for you guys today. It's Friday. Good luck today. Take it easy. You guys been going hard all week. Instead of making a few $1,000s today, maybe just make a few hundred. Get in, get out. But if you happen to make a few $1,000s, then why not, right? Okay. Thank you guys. Love you guys. Peace.